dun 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 dun. Yo yo yo. Checking if the stream is up and running, and stream is good to go. Let me just change the title for y'all. Okay, let's see. Backtesting. Today we're just gonna see backtesting market structure. Good structure. Ooh, spelled it wrong. Backtesting market structure. Cool. Education, Republic, zero views. That's perfectly fine. This is for me to get better, as well as you guys to get better if you ever decide on tuning in. Okay, great. Um, we'll start in a couple of minutes. We'll start in a couple of minutes. Just taking a look at something. Cool. Let's get it. Okay, so I took this trade already this morning. It was a continuation trade as per usual. That's the type of strategy I'm testing out. 1 is to 2.5. Good trade, good trade. I could have held longer. 1 is to 6. Could have gotten a maximum 1 is to 6 out of that trade, but that's perfectly okay. My rule stipulated I needed to wait until that certain point. I still won the trade. That's one trade. So we are kind of in London session now. My time, it's currently exactly 12:54 p.m. Yeah, p.m. Okay, we're just gonna again backtest GBP USD. Gonna scroll as far back as possible, and we're gonna backtest why market structure moves in a certain way. Again, this is just for us to learn the charts, to learn the markets, to understand why everything happens for a specific or particular reason. Okay, again, oops, let me delete that. I don't, excuse me, I don't trade uh, Asia Tokyo session. So we're just gonna let price play out here. Perfect. London Open. Okay. Price pulled up, came down during Tokyo, consolidated, boosted up again. Okay. Hitting resistance. Let's say you did take a short from this point here, right? Take a short from there, stops for the high. You aim for the wicks. Get stopped out because that's because we're in a bullish. I'm not testing a strategy out right now. I'm just understanding why market structure moves in a certain way. For those who don't know, the normal tested, like my way of thinking is now completely different. So this is the usual way of thinking. This is how the markets work. So impulse, retracement, impulse, retracement, impulse, impulse, retracement, impulse, retracement. Not saying that's how the market is going to work always, but that's how you're meant to see the market. That's how you're taught how market structure is. So, in a normal average market, we'll have a high created, and if it's a bullish market structure, we create higher highs and higher lows. So we have a higher high formed here. We then retrace, and once this newly formed high right here is broken, then this is the higher low. So what most people make with the mistake of this type of learning is that they'd say, okay, that's a higher low. They'd say, I'm pointing at my screen, but you can't see my finger. They'd say this is a higher low. No, that's not technically a higher low because this high, this main high that was created, hasn't been broken yet, which means this all constitutes for the retracement, if that makes sense. So So once this high is broken, once this high is broken, the lowest point in the impulse swing between these two factors here, so the high over there and the low over here, the lowest point in this retracement becomes your higher low. So this would become your higher low, if that makes sense, hopefully. But then again, let me show you where the higher high and higher low is. See, so we have our high created, and then our higher low created, higher high, higher low, higher high, higher low, higher high, higher low. So let me just type that out. Oh, they changed it. That's quite nice. Okay, so we have a higher high here. Then we have our higher low here. Oof. Sorry, guys. Higher low. Then we have, let me just control copy that. Why didn't that copy? Perfect. Then we have a higher low, higher high there. Second one. Third one. Then we have a higher low here. Oof. Cool. There you go. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Higher low is only created after the higher high is broken, which makes complete sense, I hope. So this is known as bullish structure. It's known as bullish structure. Then we have bearish structure, which is basically the opposite, where you create lows. So we have our lower low and our lower high. But our lower high is only created, it's the exact same with the higher high, just in our inverse direction. The lower high is only created once this lower low is taken out. So therefore, if we did continue, pull back, and we did not break this lower lowest point, this would not become a high high. Until you see this break, then that becomes a lower high. My apologies. You'll get used to the wordings and how everything is. It takes a few weeks or a couple of days if you focus hard enough and you work hard enough. But then let's do the bearish structure. So we have lower low, lower high is created over here because it broke through structure over here. Continuing. Perfect. Okay, so now we have, this is known as our lower low, and our lower lows. Oof, I don't know why that was created. I Lower low created here because it broke through structure over here. Same with this, same with that. On this lower lows in the formation of forming. Then we have lower highs. The way I learned it is just that HH was the impulse, and the one with the different letter is the retracement. So all of these are going to be the impulses, which are the moves we want to catch. All of these are going to be the impulses, which are the moves we want to catch from the opposite one, the one with the letters that are different. So these letters are different because you see how HL is different from HH. These are the same letters, these are different letters. The different letters are always the retracements. Lower high, always a retracement. Let's do that here. Lower high, lower high, lower high. And this is known as bearish structure. Sorry for the crash course, guys. I just before I start rambling and again. Then there's a third type. This is known as market consolidation. So they say they recommend you not to trade this, but I mean, if you know how to trade it well, then go for it. It's more for veteran traders. I am no by means saying I am a veteran trader, but I am learning market structure in a different way, and we'll go through that now. So consolidation is when you're neither creating lower highs or lower lows. The market is moving sideways. Exactly like that. This is known as market consolidation. The market isn't trending in any way. And the thing is, with bullish structure, people do want to catch the lower highs and aim for the impulse. So they catch the big moves. They wait for the retracement. Over here is another retracement. Put this drop and then mark and target the next impulse. For bearish structure, it's the exact opposite. Wait for the retracement, exact same but opposite, and then they want to play the impulse moves. Again, pull back, which is our retracement, stops below the retracement and aim for the impulse. With consolidations a bit different. You can think of these levels as supports, that's resistance, sorry, resistance and support levels, bouncing up and down. It's where the buyers and the sellers are struggling to break through a certain point. So, what most people do, what majority of people do, I don't recommend this until you know what you're doing. You always want to buy or sell from a trending market, but impulse up, people wait until resistance is hit, they place their stops above the resistance, and then they aim for the support. And that does usually work. But then again, the market makers know that your stops are going to be up here. So you'd see sometimes that, imagine this is your support and resistance, and you were moving in this type of market, and you're like, oh great, it's now time for me to buy because I'm on support and I'm aiming for resistance. Price will tend to sweep down below, grab your stops, and take you as liquidity, and then move up, and then respect the same trend. It tends to do this quite a bit. So that's what I'm saying. Know, you must be ready to take losses in all of these markets, but consolidation mainly, if that makes sense. So that's basic market structure. Let's get a move on. The way I'm thinking, like, there's new fads coming up. It was SMC, which I learned. It was ICT, which I dabbled in. No disrespect to him, seems like a great mentor. Many people have become profitable off of him. There's retail. There's a lot more. There's retail is chart patterns. It's the harmonic chart patterns. It's the continuation chart patterns. It's the reversal chart patterns. It's basically it's basically the start, what most people are put into, where you learn your bullish rising wedge, or your bearish flag pattern, or your bullish double bottom, the triple top, your expanding triangle, all of those types of things. But then again, my take on the market now, like I just had this crazy thought process. I when I sleep, I think about trading, and I'm like, maybe I'm not profitable now. If you guys didn't know I'm not profitable, but now you do. Maybe I'm not profitable now, but it's because everyone in the market is thinking the same way. And those people who are in the market, they've developed their own plan and their own strategy that fits their personality. And that got me thinking. I'm like, maybe if I can take one pair, so I chose GU, which is GBP USD, Great British Pound to US dollar. Maybe if I focus on one pair instead of what the entire industry is doing and focusing on, well, not the entire, that's over exaggeration, but what majority of the industry is doing and focusing on multiple pairs to make as much money as possible. Maybe if I can work on one pair, learn how the market moves for this one pair, I'll be able to become profitable. And the way of thinking of higher high, higher low, higher high, higher low, higher high, higher low, oof, higher low, oh my gosh, that kind of took me out, higher low, and then transforming to a lower low, lower high, lower low, lower high, lower low. That's how the entire market is thinking when they see trades. Well, not the entire market, but majority of the market. What happens if I can switch it? if I can find my own market structure, which is why this is a whole crazy mess, but that's why we're backtesting. We're trying to figure out what works in the market. And one of the key things that I've learned, excuse me, one of the key things that I've learned is that support and resistance is one of the most important concepts that you have to learn in the market, and not just any support and resistance. Like you might be okay, there's support there because touched, broke through, touched, broke through, touched again, touched over there, fell down, and it's tracing back. You could say that, but psychological price levels is so important as well. If you want to learn about psychological price levels, I would like you to go. I mean, I'll teach it here myself, but the king, I call him the king because he's one of my mentors. Well, he's my favorite mentor. Not my mentor, but he's everyone's mentor. His name is Brutus. You should check him out. He's absolutely phenomenal. I've attended some of his boot camps. I'm in his Discord. Throughout his boot camps, throughout his boot camps, we would do like not live trading, but he'd talk about setups that could occur in the future. Because we went through all of trading. We went through psychology. We went through why the market moves in a certain way. We went through his strategy and how he became profitable, and he uses support resistance and a fib entry if you're interested in that. But sometimes, and he's a higher time frame trader, so like 4 hours, 2 hours, 2 hours 30 minutes, no, 2 hours, comma 30 minutes, 2 hours and the 30 minute time frame. That's what he's training into now. We would literally sit with him, not analyzing the charts hours before, and during the same course, his trade would play out, and people would take it in. Of course, I wouldn't, of course, because I'm slow. But it wasn't my strategy that I wanted to learn from him. I just wanted to learn how he looked at the markets and understand how he saw market structure. Because when I look at everyone else, everyone looks at market structure differently. That's why I'm saying you should also do this as well. I'm rambling, but let's take a look, right? So this area here, what SMC traders will do, which I was, that mark this zone here as a supply zone, a supply area for price to come up into test and reject, but there's also support level here. So let's see how the market reacts with that. Okay, we're still looking bullish because of this. Taps into instant rejections off this point, a large bullish reaction into and then a bearish reaction coming out of it. Consolidation is occurring. We broke through the supply zone. This is also another supply zone here. This is how SMC traders look at it. I'm not, I mean, I did SMC for quite a while. Rejection off, and breakthrough. Okay, now why did the market break through? Is it because we were in a bullish state? However, if this caused massive, this area here caused was a cause for massive large volume into the market. So why is it not disrespecting these 2 points? That's what I'm trying to figure out basically. London session open, we continuing going up. Now we're getting our bearish volume. It's reacted off of this point here. Hmm. Why didn't it react off here? Cause let's take a shot from here. Let's say you took a short from here, stops below this high, and you wanted to aim. No, there's a large amount over here. I want us to 3, right? There we go. Market structure is so important. Okay, now let's see where this starts. Why is it continuing to move down? Bearish volume. high bullish volume. If you break through this high, we can look for longs. Back up there, 1 is to 2. Take us those. Okay, basically that's what we're gonna look for. I'm getting lost in the source now, but let's continue how to look. Okay, we've now switched in terms of market structure. Pulled up, came down. People would see this move over here as the impulse. Well, okay, not let me not say people, but I would say, because people would look at that. Okay, pull back. So this move here would be the impulse, right? Which means now we've invalidated this low, this higher low. I'll get into what strong highs and strong lows are in a different episode. But we've invalidated this low, which means we're now looking bearish, right? So we've had a bullish uprising, and now we've taken out this higher low here, which means we're invalidating again, which means we're bullish. We're looking for bullish now. We're feeling bullish. Now we're feeling bullish, sorry guys. Where our market structure is bullish, so we're looking for longs. We've had an impulse upward. Now we're pulling back in price action. So we would expect price action to move up, right, and break through this point over here, technically, right? Because this was now our last impulse, and this is our lower, this is our higher low, and this is our high until this is broken. So we should expect a bullish reaction, yeah. There's an order block over here, as well as an extreme order block over here. Tapped in, still consolidating. Market is over, Tokyo comes, and it does break through this high. So now this is our low. This is our low, this is our high. Delete this, delete this. Now expecting this high to get taken as well. That high was taken, this is now our low, and this is now our high. Broke to that high. Hmm. That was way off. I was just testing something. But yeah, long wick. What was this? This was unemployment rates. Okay, that makes sense why the market reacted like that. Okay, interesting. Look at this. This is quite a bit. So, test this new strategy. Sorry guys, I'm getting lost a bit, but I want to see how the market reacts. Market's gonna go long. Yeah. Oof. Look at that wick. Ah, technically it did go long and it did go short at the same time. Let's see how price played out during this news event. Okay. Okay, it boosted up and then it went down. Makes sense. Okay. Mm, let's look what the market's doing now. Consolidating. Maybe I should just stream like London and New York session when I trade. I don't want to give away my strategy just yet because I haven't forward tested it enough. But it's it seems like it's a 50 to 80% win rate, which is good. Back tested it last week. It made 12% in 2 days, which is quite impeccable. I won't lie. But again, that's back testing. It's not forward testing. I need to forward test it, see how my emotions play in the market, see what I do. So yeah, I'll check you guys later.